So I think that we can start and other people will join us. So welcome everyone to this AMA session. Today we are going to discuss AI, AIR, and RWA about the more accessible financial markets and mostly about the AI in RWA. So today I'll be your moderator, and I'll be happy to introduce our three speakers. Our first speaker it is Melania, business development lead in PIPO. Elsa, we have here Jeremy, co-founder of WageFlow, and CBDO of Nysa Finance, BRAZENSKI. Uh, yeah. So I'll be glad to give the first word to Melania to introduce herself. Melania.
Hello, everyone. My name is Melania, and I handle business development at PIPO. We are building the first regulated platform for issuing on-chain warrants on PIPO company shares. And I would like to explain in simple terms what this means in practice. Most people know DeFi as a space defined to tokens and yield. We offer something different, a real legally protected right to a stake in private companies before they go public. Here, how it works, like how the model works. We select late-stage private companies preparing for a listing on Nasdaq or other stock exchanges. We structure an ERC20 warrant token issued under Regulation S, making it accessible to investors worldwide, excluding, of course, US residents. This warrant gives you the right to purchase shares at a fixed exercise price, aka strike price, at the time of the IPO. If the market price at the time of listing exceeds your strike price, you profit from the difference. And since it's a warrant rather than the share itself, your cost is just a fraction of the share price, making it risk-reward ratio like highly attractive. Also, there's another option. You don't have to wait for the IPO itself. You can trade the warrant on a PIPO secondary market even before the listing. This means real price discovery, real liquidity, and no asset lockup periods. When the IPO arrives, you can either convert the warrant into actual Nasdaq trade shares, deposit it on your brokerage account, or sell it on the secondary market for USDC. So, in short, we have created a regulated mechanism that moves from a private company to an on-chain instrument to a public offering with liquidity provided at every stage. This is precisely what indeed didn't exist before PIPO. That's shortly about us. Or not that shortly, but at least I hope you got the main picture.
Yeah, absolutely. I think our community listeners got the full picture. Yeah, thank you so much, Melania. Here, I would like to give the word to Brzezinski and Nysa Finance. Yeah, so you can introduce.
Yeah, hey Roman, hey PIPO community. Really great to be here. Thank you first of all for having us. It's always great to have a conversation. I'm Brzezinski. I'm the CBDO, Chief Business Development Officer for Nysa Finance. And to just give a quick context, what we're building, and basically right now there's over 31 billion in tokenized real world assets like treasuries, equities, private credit sitting on chain. But less than 10% of that value can actually be used as collateral because traditional lending protocols aren't built for RWA risk profiles. So, what is NISA doing? Well, we've solved this by introducing a unique hybrid market architecture. We give users the deep shared liquidity we usually find in monolithic pools like Aave, but with strict localized risk containment of isolated markets like Morpho. On top of that, we've also built a machine learning model through our smart loan module to help borrowers avoid liquidations. Our goal is to unlock the $1 trillion credit ceiling for RWAs, and we're incredibly excited to roll it out in our testnet and go mainnet launch hopefully later this year in Q4.
Great, great. Many thanks for your introduction. Very impressive project. Here, I would like to move to our next speaker. Yeah, from the WageFlow, Jeremy. Yeah, so you can introduce yourself. Yeah, seems like Jeremy has some technical issues. Yeah, okay, no problem. Yeah, we can move forward. Once he fix his problem, we'll back. Yeah, so our next question is mostly about the state of RWA and DeFi in 2026. So here I would like to ask the following question. So like unresolved industry issues, how can they be fixed? Everyone is talking about AI and RWA, any blogger, any QL, and most implementations still appear superficial and not fully available. In your view, what are this industry currently lacking, and how it can be fixed in your opinion? Melania, what do you think here?
Well, I would say that the biggest issue is the value, the real value. So the biggest gap isn't AR tokenization itself; it's building solutions that create real value, like for the industry and also for users and everybody. Many AI and RWA projects showcase the technology, but they still face challenges around trust, integration, regulation, distribution, and in general, like user adoption mostly. For the RWAs, the industry needs clearer standards, that's for sure, very needed, better integration with existing financial systems, and stronger regulatory support, I would say. For AI, the focus should be on mm, practical solutions that help business automate real tasks in a secure, transparent, and reliable way. Um, I would say the next wave of innovation won't come from using AI or tokenization as buzzwords, because basically right now we have AI everywhere. Only perhaps in my salad they don't serve it only, but the rest is everything with AI. It will come from building solutions that solve real problems, improve efficiency, and deliver measurable business results. That's what I think.
Thank you. Very interesting opinion. Yeah. So the same question to Brzezinski. So what do you think about the unresolved industry issues? How can they be fixed in your
Yeah,
opinion?
I think the answer is a lot very broad, but I think I agree with what Melania was saying that AI and RWAs often do feel like buzzword integrations rather than deep structural synergy. What I would say is generally what the industry is lacking is deep integration, proper risk infrastructure, and bringing real utility. I think many projects tokenize assets but stop at issuance. So liquidity is thin. The risk models are copied from crypto volatility, and compliance and regulatory rails are fragmented. So we don't really have a clear direction with that. Having said that, I think AI is often added as a hype rather than solving concrete problems like dynamic risk pricing or user experience, as we can state with the current market situations as well. I think we're in a very big AI bubble, so I think it's safe to say that. that there's a general hype with anything that has to do with AI. How is NISA? What is NISA doing to address these things? I think we're building a purpose-built isolated market for each RWA issuer instead of forcing RWAs into general crypto lending protocols. This gives higher capital efficiency with controlled risks. How we do this? We combine proven interest rate models with a strong ICO 3100 based risk framework that separates product risk, which could be our code or security, from market risks, which could be volatility and liquidations. And I think this makes implementation viable and not superficial. To answer your question.
Yeah, absolutely. You answered fully. Um, Thank you so much. Thank you for sharing your opinion. Here, I would like to ask if Jeremy here, and probably he could answer his question. This question. Jeremy, can you hear us?
I'm not sure if he's in.
Yeah, seems so. Okay, okay. So let's move to the next question. More accessible financial market, accessible for whom and exactly? Like we all remember, like accessibility. It is easy to claim and hard to prove. So tokenization equities crossed around 1 billion in the market value, and 100,000 holders. But the most of the world still can't touch PIPO and RWA, and institutions they can use it as a saving instrument, but the rest of the world cannot. And in your opinion, what can an ordinary user can do today thanks to AI and tokenization that was simply out to reach for them in the traditional financial markets a few years ago? What do you think here, Melania?
Well, accessibility, in my opinion, should mean giving more people access, in our case, to financial opportunities that were once limited to institutions or high net worth individuals, or like the right people, basically, at the right places, at the right countries, and having the right positions. Thanks to AI and tokenization, users can now invest with lower minimum amounts, also access global assets, earn yield through digital products, and participate in investment opportunities that were previously difficult to or even impossible to reach. So that's a huge change. And with that being said, the industry still has work to do, in my opinion. True accessibility isn't just about making assets available. It's about it's more about a lot more about making them as simple to understand. Also, very important to be secure to use and compliant across different markets. Like that's the main task, and that's what needs to be done. So they're really accessible. I mean, to match the what I understand by accessibility in this case. Um, yeah, that's where the next stage of innovation will make. Sorry, something happened, but yeah. So that's where the next stage of innovation will make the biggest impact, in my opinion.
Absolutely true. So nothing to add here. 100% agree. Uh, yeah. So the same question to Brzezinski. What do you think about more accessible financial markets, like how it's going on now thanks to the AI and RWA, and how it was a few years ago? What's like different? What ordinary users can do with that, in your opinion?
Yeah, well, I think Melania's answer was very nice and concise, but well, let's just go back, right? Let's go to the past first. What was traditional finance? You spent decades behind rails, right? If you wanted to borrow capital against high yield institution credit, sovereign debt, U.S. equities, you had to be an accredited investor. You have to go through months of paperwork and deal with predatory banking spreads. Today, I think what Melania was saying, tokenization provides ownership, right, for those prime assets. But tokenization alone is just, I think, the first step. What an ordinary user can do today, thanks to what we're building at Nysa, is access instant permissionless leverage against those global yield-bearing assets. I think an everyday DeFi user can hold yield-generating products, for example, on Auto Finance, USDY, or institutional assets like Franklin Templeton or Centrifuge. Instead of selling them to catch a crypto opportunity, they can seamlessly deposit that into Nysa to borrow USDC, Ether, Bitcoin instantly. So, what is the component? I think the AI, artificial intelligence component, is what makes this accessible to non-institutional audiences in today's world. Usually, assessing your personal liquidation risk across a complex asset portfolio requires a team or quantitative analyst, usually, that you need consultation for. But our smart loan module, machine learning module, brings that institutional desk directly to everyday users. So it can automatically serve up clear and risk adjusted options, from being a conservative risk analyst or a moderate or aggressive take, whichever risk profile you take or have for digesting. And I think this gives the retail users the exact same capital efficiency and risk mitigation tools that are used in Wall Street hedge funds or anyone that has a professional venture capitalist. So I think that's what the tying bridge is.
Yeah, absolutely true. Different time, different methods. Yeah. Here I'd like to move to our next part of our AMA, so mostly about the projects. So the first question is about PIPO and AI tools for the evaluation. Like PayPal company shares are classic example of insiders only market, and they're legally complex to structure and require minimum investment amount that you should provide. What role does AI play in identifying and evaluation process in PIPO? Melania, can you elaborate here?
Yes, sure. Thank you. That's a great question. Um, yes, we use AI tools, and they genuinely make us faster. Uh, where they help is at the top of the funnel. Initial screening of private companies, for example, scanning pitch materials, financials, market data, and news flow also, and comparing as well company against hundreds of similar like ones. Um, what like indeed what used to take an analysis a week or more of scrolling now takes kind of like a couple of hours. AI is great at surfacing like red flags early, or stuff that you might like just overlook, and also telling us what's wrong, or what actually worth a closer look indeed. It might be both an opportunity or an issue. Um, I think, but this isn't the important part. No company gets onto PIPO because a model liked it. That's absolutely no way. Every asset we build on chain goes through full human-led due diligence and religious compliance process. Legal structure, ownership, verification, regulatory checks. All those are like done by human. We trust humans in our company. When we are when we are talking about real securities and real people's money, it's simply too early to delegate those decisions to just an AI. The model narrows the field, but people make the call and carry the responsibilities. I mean, it's us that we are carrying the responsibility, not just an AI. That's our wine, and I think anyone in general, like in RWA, who tells you otherwise, is either exaggerating like their AI or exaggerating like the under investigating in compliance, for example.
Yeah, that's true. So we cannot fully lay on AI. So it's not a superpower pill. Yeah, that's true. So the next question is for the BRAZENSKI and Nysa Finance. So uh, let's discuss more about like tokenization and asset in one. The the real utility test is whatever you can do something this like borrow against it, lend it, or put it to work, and less than 10 percentage of tokenization of all tokenization RWA actually use it in open DeFi lending today. So we can see that on Hyperliquid, on Uniswap, and many other boards. So how does NISA lending and borrowing layer for RWA close that gap? How do you underwrite and price risk of this collateral, and where does AI strange that process can help this such process?
Yeah. Thanks for the question, Roman. Well, where do we fill that gap? We close that gap by, I think, removing the fear and structural inefficiency that keeps RWA holders from lending. Right now, holders leave assets idle because existing solutions either put their funds in a monolithic blast radius of the global protocol risks or traps them in an isolated illiquid pair. So what NISA's architecture is doing is actually a game changer here. We created a isolated markets focused on specific asset categories or premier issuers. For example, not just shorting anyone out, but just giving you examples of like Franklin Templeton, Centrifuge, or Ondo Finance GM assets. Inside these markets, all asset shares are liquid, right? So if you deposit on Ondo equity tokens, you weren't restricted to borrowing one specific stablecoin. Instead, you can borrow from curated pools of major crypto assets like wrapped Bitcoin, wrapped ETH, USDC, and this creates a deeper liquidity pool for much higher capital utility. For answering the question of how this is underwriting and pricing risk, I think we have to respect the differences between RWAs and cryptos. RWAs are less volatile but are highly exposed to liquidity constraints, off-chain oracle delays, and market hours. And we also have to understand that there are issues with oracle usage as well in today's hacks with smart contracts and stuff like that. So we have to be very mindful of that. This is exactly where AI strengthens the process, though. So our smart loan module evaluates roughly 20 distinct parameters. It looks at collateral volatility, asset correlation, historical liquidation datas, and live market depth. So it doesn't rewrite the core smart contract parameters, but it acts as an intelligent user facing overlay. Um, it provides borrowers with precise risk scoring, showing them exactly how much they can safely borrow under conservative, moderate, and aggressive profiles, which I had mentioned earlier, to minimize their liquidation probability while maximizing their capital efficiency. To answer your question.
Yeah, thank you. I think you answered fully. Very interesting. I really impressed how RWA and DeFi, like lending, borrowing, are working together. Yeah, very interesting. So we have only one question left. So like I would like here to ask about this, like 5 years out, and what does an AI native financial market looks like how it will be in the 5 years in the future. Like we all know, AI agents holding wallets, they can help to streaming these salaries for your employees. Like they can anyway they can they started to manage your portfolio, and let's try to figure out the paint picture of what we could probably will see in the next 5 years, in the 2032. Yeah, what does role your project play in this new financial system? Melania, what do you think?
Well, I believe, and also I believe also the team PIPO shares the same opinion that the financial markets of 2031, let's say, will be more intelligent, connected, and accessible. In terms of AI agents, I would think that they will help. Yes, similar to what you said. I mean, they would help users manage financial decisions, optimize portfolios, and interact with markets in a more personalized way. Um, while tokenization will make a wider range of assets easier to access and trade. This is what I would hope for. Well, I would see a future where traditional barriers between public and private markets become smaller, where users can access new investment opportunities through transparent digital infrastructure, like, for example, PIPO, and where financial products can adapt to individual needs in real time. PIPO's role in this future is to help build the bridge between advanced technology and real financial utility by combining AI-driven insights, tokenized assets, and accessible financial tools. We aim to create an ecosystem where users can participate in markets that were previously limited to institutions, for example. So I hope that in the future we will just manage to enlarge this and like get more reach, and also perhaps also develop our services and everything, so we get to the level that all those services and processes and like markets are completely connected and also completely accessible to everyone in the world, ideally, or at least to the most of the people around the world. So yeah, that's what I imagine, or also I wish for.
Yeah, thank you. Very interesting. Hopefully that will be. Yeah, so the same question to Brzezinski from Nysa Finance. What do you think about this?
Well, I think these future questions are always a little bit tricky, but to answer it, I guess in 2031, financial markets will always be on, agent native, deeply integrated with the real economy. I think AI agents will autonomously manage wallets, rebalance portfolios across tokenized assets, stream salaries perhaps into optimized yield vaults, and execute complex strategies 24/7. Private markets will trade with public like liquidity thanks to tokenization. Capital will flow globally and efficiently to productive assets, and probably with AI handling personalization, risk, and compliance at scale. Pretty much we can sleep while our money's doing the work for us thanks to AI. Traditional and on chain rails will converge into hybrid infrastructures. In terms of NISA Finance, I hope will be the credit layer in that world, the core credit layer. Our isolated real world markets will scale and support diverse asset classes and tokenized strategies. Our smart loans module will enhance and evolve like into sophisticated agent friendly tools. letting both humans and AI agents borrow safely against real world collateral. And I think we aim to power the institutional retail bridge, helping turning tokenized assets into productivity, backboning of an AI native financial system. That's what I think.
Yeah, absolutely. And that's my personal question, and the following to your answer. Like, would you trust your money to AI? What do you think?
Oh man, are you asking in relation to present time or in the future?
Like, let's be honest. It's difficult to discuss. Like,
Yeah, this is a
can we trust it today or later? Anyway, you you
okay.
should
Well,
trust in the
I
future.
think this is a tough question, and honestly, I don't think AI is powerful. I mean, AI is powerful, but must be applied responsibly with regulations and under regulations. And I don't think that's where we are in today's space. In general, I think the industry should use AI for augmentation, optimization, but blind decision making and on-core financial actions, I don't think so. Um, at NISA, I think AI is targeting decisions and support power, not full autonomy. Like I stated, our smart loan modules provides recommendations for optimal borrow amounts based on real-time data and historical simulations. The users always make the final decision to borrow. That's very important. Core protocol functions like interest rates, liquidations, collateral acceptances are governed by transparent, auditable smart contract rules and risk parameters, not AI. So humans should always stay in the loop for model oversight and parameter updates and instant responses. I think accountability here is clear. Um, the protocol and its operators with strong security practices and monitoring. I think NISA treats AI as a tool that improves user outcomes and doesn't find it replaceable for verifiable rules and human accountability. So to answer your question, no.
Yeah, just remind me. I saw some news recently, like some dudes fully rely on AI, and ChatGPT decided to delete all data
Yeah,
from
I think you can
ChatGPT.
find a lot of problems with these AI models as well, and they're not that accurate.
Yeah.
So there's a lot to still fix and tweak out.
Yeah, absolutely, absolutely, absolutely new technology, and it should pass some quite enough time for that. Just my own opinion. Melania, what do you think? Could you trust your money to AI?
I don't trust my money even to myself sometimes, but that's another question. Uh, so I can agree, like I really agree with what Brzezinski said, and also I can add that yeah, I mean AI can bring significant value to finance, but trust must come from transparency, control, and clear accountability. And yeah, AI should not replace human responsibility. That's 100% sure. It should enhance decision making by providing better data analysis, automation, or like for example risk insights. Mm, at PIPO, we see AI as a powerful support layer rather than a fully independent design market maker, decision maker. Sorry. Mm, AI can help identify opportunities, analyze information, all those tasks that can be automated, improve also efficiency. But like the critical decisions involving risk, compliance, in our case, very important, and user funds should remain under clear human and governance oversight, in my opinion. So no, also
Yeah, yeah. So that's absolutely true. Just a couple cents. Yeah, it should pass some time. That such technology should be should be more should pass more tests as well. Same as the planes in the last century. So just need to wait. I just want to say thank you all. It was wonderful. MA was glad to speak with you and hear your opinion regarding the future and current situation about the RWA and AI, and mostly impressed about all projects that were presented here. Yeah, so it's really sad that Jeremy couldn't join us, but I hopefully he will join us in the
next time.
next time. Yeah, absolutely, and we'll be happy to hear more about their project. Thank you so much. Have a nice weekend. Stay with us.
Thank you, guys.
Thank you for having
Cheers.
us.
Thank
Take
you.
care.
Thank you. Bye bye.